Okay, so this is Matt Shaw, Chief Analyst of Knightsbridge Trading Academy, and this is the Training 7 video, assessing FX pairs after crucial data announcement. Now, today we saw the Bank of England meeting. Now, I will go to Forex Live. This is where I get all of my free information, and as you can see, we've got it set here, 14th of September. GMT +1, it's still September. We're not in October yet, the clock hasn't gone back. And we scrolled down to 12 o'clock. Now what we saw today was that interest rates were kept on hold. There was no major surprises. I think obviously the bank has made it known now that they're sort of more keen on keeping an eye on inflation as opposed to growth, but yet this was good for the pound. Okay, so relevant really what they said in the near term, purely because the movement of the pound was so dynamic. But what we look for, now this is what we look for. We look for that initial bounce or spike or retracement, and we do not, under any circumstances whatsoever, look to trade half an hour before or even an hour before the announcement, because purely what I was looking at today, I was going to trade around 10:30. I saw an opportunity around 10:30 here, looking to sell the cable. Now pound dollar is known as cable. Now I was looking to sell here, and I thought, you know what, this could be a suckers sell-off, like you get suckers rallies. You do now and again you get some suckers rallies only for the market to come back off. That's the market's trying to get your money in so they can, you know, knock you back out at a later date. I'll do more training on that again. But today was all about assessing and staying out of the way of the pound until this market absolutely done its thing. Now, when I say we look for that initial spike or sell-off, what happened here was the market, look at this reaction. On a candle, this market completely sold off over 60 pips instantly, just upon the announcement. So, okay, rates on hold. Obviously, they didn't raise rates. They left them on hold. So immediately, that was potentially slightly negative for the pound. But what became apparent then was the amount of people that voted for the hike. There was at least 2 that voted for the hike. And the vote unchanged, obviously not to raise, was unchanged there for September. Now, and one other thing as well, the QE total was 435 billion for September as well. Okay, so these are all the other factors you look at. So after this come out, you look for that initial spike. You still don't get in. You do not get in on any sort of flimsy, because look, what if you were going to sell the market here? If you were going to sell the market down below 132, well, you're only getting in with absolutely, potentially hundreds of thousands of other people, but also you're getting in when information is scarce. Those few seconds where the market is just wanting to digest the information. Now, you cannot do that in 5 seconds. The market has to suss things out. It's like when you hear, you know, news from someone, it's kind of not necessarily bad news, but it's not great either. You want some time to digest everything before you think how you're going to deal with it. And that's exactly what the market does. So initially this sold off. It took into account all these other sets of data in and around just the bare announcement or base announcement itself. And it went on then to continue to rally. Now, I always say this is a half an hour chart as well. It's at minute 30. Do not trade at least an hour before, especially huge central bank announcements, or half an hour after. Now, as you can see, this complemented, as we've touched on in other videos, and we will go on to make more videos about this. This complements the trend. The trend since the middle of August, where the market's bottomed out around 128. The market has since found a base, third week of August, and since rallied higher. Now today, this break was all about where was the market going to go? Were we going to pick up some steam and head lower, or are we going to head higher and continue this rally? So what we learned today was you have to look at the overall picture. So the best thing to do is get a 4-hour or daily out and say, right, what's the current trend? Now the current trend is quite obviously markets are looking, pound is looking strong. The pound is looking strong as a whole. It's had a right kickback the last 3 weeks, and we're looking a lot stronger than we were. Let's even pick up another one, pound yen. Again, trend. What's the trend? Over the last, oh, that's not factored in the current recent days. Let's just go on to pound kiwi then and give us the last 3 weeks. I don't know why it was coming up just May there, but again, since 21st, 23rd of August, 23rd, 24th, we've sped higher from what as low as 175. The market's rallied 800 pips, or actually now 1,000 pips, but up to 700-800 pips before the announcement. Now, when it initially sold off, if we go back to look at the 15-minute chart, when it initially sold off, you then need to still wait because you think, well, hang on, is this breaking a trend? It's all about, is the market going to break a trend? And a big announcement like a central bank announcement can indeed do that. That's what a central bank announcement can do. It can completely take away all the hard work the market has done over the last few weeks. But as we saw the market pick up over the next sort of 20 to 30 minutes, that's confirmation in itself. If the market has waited 30 minutes and it's condensed the information and it's now looking stronger, it's factored everything in, then you can look to potentially go with that trend. And if you've gone with that trend, say here on the second candle, you could have picked up well over 100 pips, 100 points. And I'm still on one of the trades right now. As you see, I got in 1406, that's actually 1206 because MetaTrader 4 is 2 hours difference because it's based in, gets its time from Cyprus. So this is actually 12:06 p.m. UK time, and I just bought, just to test the 0.5 on a real account. I've already had I've just banked another profit of 700 on this, but this is another buy here where I've closed out and left this run, and we're up around again 375 on that. That was 6 minutes I left it, so it was still on this candle. But again, the rule is at least 15 to 30 minutes, but I've got a lot more experience. After 5 to 6 minutes, I could see I rode this out, this sell-off here. I rode that out, and this is pound kiwi, by the way, not pound dollar. I rode this out. This happened to last around 30 seconds to a minute. The market continued higher, turned around. It took around 4 to 5 minutes, and it got to here, and I thought, you know what? It's been at least 5-6 minutes. I know where this is going. And it continued higher. So that's where you can pick up on these days some quite good profits, but you must tread very carefully, use extremely low lot sizes, keep your risk reward extremely low and in line with your risk appetite, and always double and triple check the market prices you're getting in, and make sure you're not getting suckered in the minute these announcements come out, because it's tempting, because the moves look extremely sharp and the moves happen very quick, and you think, oh, I'm missing out. Oh, no, just wait as long as you can until you see, right, this is now coming back, the market likes this, it's going with the trend. After here, when we got back up towards this level, it obviously continued and contoured its trend again. If the market had continued around here, I'm now looking on a 4-hour chart, if the market had continued to languish around this level, you could say, well, it's not going back with the trend, this still looks to be broken and quite jittery. You wanted that confirmation, you wanted the market to move up around 40 to 50 pips to confirm the trend is back in play, and it sure as hell is. Sure as hell is, because for instance, on the pound dollar, it's got a lot of room to make up because it sold off so much after Brexit. If this is a real strong trend, the market could go a lot higher. But the rule is always wait that 15 to 30 minutes. I know I waited only 6 minutes. The more you get used to this, the less you can wait, because you do just know, you've got that instinct and you know about the trend. So I run from the 15-minute just to give my pricing, and then to get the overall picture of the trend, I use the 4-hour or the daily chart. Usually the 4-hour chart gives the best picture of this, because it still gives you sort of a month or two to look back on and assess the current trend of the market over the past few weeks, and as I say, maybe month or two. And then you go back to your 15-minute and say, right, I'm waiting, it's clearly in line, let's get in. The same on the downside. Do not get suckered in, guys, and make sure you wait, because these types of events can be very profitable indeed. Thank you very much.